Welcome back guys to my channel. I'm going to be breaking down what is my next trade in the markets and exactly what I'm looking for. So guys, we've had some huge news this week with Kevin McCarthy, the US House Speaker, has been removed by his own party. Now this is a part of the picture of what my trade is going to be and what I'm looking for. Kevin McCarthy, he lost his position as US House Speaker because he sort of has created a coalition between some Republicans and also Democrats. What he did was he averted a government shutdown and extended the funding within government until November 17th. Now, because he did that, a lot of the Republican hardliners disliked him for doing that and not holding his stance as a Republican. And this is where the ousting initially came from. So a lot of the bickering within the House and also Congress is focused around the aid for Ukraine, of funding Ukraine. A lot of the Republicans are strong believers in they should be looking after their own country first and the border control as a priority over additional funding to Ukraine. Now, funding has only been extended until November the 17th, of where this whole entire debate is going to come back around. And even before that, they need to voting a new House Speaker as well within October. So this is all going to be very rushed, and I genuinely believe that we will see a US government shutdown because the conversation around Ukraine aid is so strong from both parties and individuals within their parties. So there's a lot of conflict at this moment in time within the Republican Party around should we provide aid to Ukraine or should we not provide aid to Ukraine. This is what I'm anticipating happening once we have got a new US House Speaker, and then we also have the funding running out on November the 17th again. We're going to be back to the drawing boards, but this time we know that that conversation and topic around Ukraine aid is going to be at the forefront of the decision. Now, I genuinely believe that because Republicans are in control of the House, that we will see a US government shutdown on November 17th. So what will that do to the markets, and where will the trade be that I'm most interested in? I also see this trade has been very profitable for myself, and hence why I'm talking about it. So my trade idea stems around this sort of conflict within the House, within the Republican Party, and especially around the topic of Ukraine aid. As we've seen the result, Kevin McCarthy sort of buckled to extend that to avoid a US government shutdown, and now he's been removed as a House Speaker. This is a big conflict, and it also shows the power of the Republican hardliners. So I'm assuming the next US House Speaker is also going to have to take the stance of we don't want Ukrainian aid. And with that in mind, I do anticipate a government shutdown. Now, the timing couldn't be more typical because this is also a similar timing round in November when we had the last government shutdown with Donald Trump. So what we have here, we have a huge amount of turbulence within government, within Washington, especially within the House and the Republican Party as they fight amongst each other. This is re-highlighting the governance issue that Moody's rating brought forward, who is still giving the US a top grade at this moment in time. Now, arguably, they mentioned this in September, highlighted the risk of the governance side of issues, and I anticipate that Moody's could potentially downgrade as well. Now, if they do that, we will see further fear within the US equities market, causing a larger sell-off before we have a new US House Speaker. So that's something to bear in mind there. We've also had Goldman Sachs come out and reiterate exactly my opinion of when there is a new US House Speaker, there won't be any temporary bills that have been passed or extensions here, especially around Ukrainian aid. Otherwise, he might be potentially looking at getting ousted as well. So we can see Goldman's also reiterating the same thought process that I was talking about. So this is going to come heavily into focus on November the 17th with the Republican Party pretty much at civil war. We also have more of a leaning now that Moody's could downgrade as well. With that bearing in mind, I anticipate a higher amount of volatility coming into the US markets between now and November the 17th. And even if we do then have a government shutdown, even further into late November if we have that government shutdown. So the opportunity in the trade that I'm looking for, I'm going to break it down now and run through what is my entry criteria, what I'm looking at, and why I'm looking at it. So here we're looking at the volatility index. Now we've came off the lows of 13.5 here on the volatility index. We've recently breached 20. Now a lot of this volatility we've seen moving higher now, so anticipation of further volatility in the markets. Now, we've just had Kevin McCarthy pretty much ousted as US House Speaker. However, the topic around, we've obviously now got to elect a new House Speaker, which is going to take, I would say, arguably a long time, because it took, I'm pretty much certain, around saying 15 times of voting just to get Kevin McCarthy into power. So it'd be very interesting to see who actually moves into the House Speaker. Well, that happens within October, so that's going to add further volatility, I feel, to the markets this month. And obviously, with the topic spins quite high, I anticipate that we could see the VIX move higher. Now, anticipating this and the likelihood of a government shutdown, I would anticipate that we see a lot higher movement here within the VIX. Now, previously speaking, if we scroll back, you can see the spikes all the way back here where we saw volatility index go over 80. Obviously, that is COVID related, and then came back down, and we've had a sort of frequent period here of volatility around the Russian invasion and Ukrainian war. So I do anticipate that we could see the VIX spike back up here between sort of, I'm going to say 26 and sort of 35. Now, from this aspect, what I want to bear in mind and keep in tune is that the VIX moves higher based off volatility. Now, we all know that volatility is not going to last forever, especially with something so important like the government. So let's just answer that simple question. Will the US government be shut down forever going forward? No, we know that's not going to ever happen. It can't happen. So therefore, we know that it's going to be a short-term influence on the market of having that additional volatility. I anticipate that I'll be looking to short into the volatility at anywhere from 26 to sort of 33, 34, and analyze what that slowdown looks like. Now, the best part of me holding a short position in the volatility index is that when we have our monthly rollovers, usually I will gain on the monthly rollover as long as I'm holding short. So I feel like this for me is almost like gaining a dividend play, but also having a strong reward to risk, because we all know that volatility is not going to be lasting for a long period of time. Just like this spike in COVID, you could argue that, would lockdowns happen forever? No, they wouldn't. So therefore, is it wise to say, look how high the volatility index is up here, to take a short position knowing that COVID isn't going to last forever? We're not going to be locked down in our house forever. The same is likewise with the invasion. You can see that the peak of the volatility, and then obviously it's selling off and so forth. So I'm going to be looking to short into the VIX if we see that, and basically look to hold that for a prolonged period of time through 2024, because as we anticipate an equity rally, and ultimately we could see the markets come all the way back down to 14, 15 on the VIX. So this is my overall play, shorting into high volatility. I'm saying it here first on my YouTube channel that this is what I'm anticipating with a government shutdown on the horizon on November the 17th. Shorting into that volatility and then riding it when the equity run comes back into play in 2024, because we've seen peak interest rates and therefore we usually see an uplifted equity market. We're also seeing PE ratios starting to fall, which makes them much more attractive to the upside, basically. I hope you enjoy this video, guys. This is my trade on what I'm looking at within the VIX. Short sell, US government shutdown on November the 17th. Get in the comments if you agree with my outlook, and also if you think I'm right in what's going to happen. Catch up in another video. Make sure you hit that like and subscribe if you enjoy my trade ideas and market breakdown.